Good morning, it's Jonathan Barrett with the week ahead report. It's currently 7:41 and certainly it's Monday the 19th of September. Okay, look, I've been away obviously for a little while and back for a week over in Europe, just seeing what's happening out there, attended a conference. Look, I guess the nutshell, Europeans I think are very mixed as to what's happening over there at the moment. Generally, I guess if you want to sum it up, the confidence is certainly not there, but central banks are certainly trying to do the best to get things cranking. There's certainly a lot of concern over, particularly in Germany, where I spent a bit of time, where they're basically feeling that they're basically holding up the euro, and a lot of them feel as if they want to actually get out of the euro. But generally speaking, I think when you look at the central bankers and the government, there's no way they can. The layman isn't happy. But when you look down at the governments, what's happening, the governments certainly need to commit themselves, which they have done and will continue. And the main reason for that is that a lot of the other Europeans have actually bought the debts of those various countries which are in problem, obviously particularly Greece. And while they've invested in that, they can't allow it to default. So otherwise you'll see there'll be a much larger concern than what we've currently got. The ideal situation at the moment isn't here, but whilst they're supporting it and continuing to increase that liquidity, that's me, it suggests that there's some resolution. But anyway, with the week ahead report, what we do is bring us all up to date with what's happening for the trading week ahead. So let's get right into that. Okay, as we move on, major parts of news there. I guess when you're looking through it, hedge funds obviously cut bullish bets on commodities. That's understandable, given the concerns that we've got there. US-Euro policy and action on debt raises risk. Well, we certainly suggest that, but the central banks are certainly intervening there. I guess that's probably about it of any note. Obviously, concerns there on energy. Hurricane Mare also weakened there a little bit. So no real threats there to the energy complex. So let's have a quick look at some of the numbers now. Let's move here. First of all, let's have a look at the dollar index. Obviously a leader and shaker for us. It has bounced a little bit off its lows. We still support the strengthening dollar. And as I suggested, we're there at 76.12. I think that trend will resume pretty soon. Let's have a quick look at that daily chart. And with any of these moves, there's a little bit toppy up there, so expect some sideways price action. 76 is probably the lower end you'd want it, and that needs to just build up support before attempting higher. Have a look at the Aussie dollar. Aussie dollar 103. As you can see there, a bit of a fall there. Momentum indicators on the downside, but whilst we're on this good support here, expect it to remain a little bit, certainly while that US dollar consolidates for some time. Obviously with the euro, 136.72, euro has been under pressure for some time, and we probably expect that to continue. Remember, we have had that peg against the Swiss franc, so people will probably be buying dollars. If any concern that we get in Europe, people will probably go to dollars, obviously because they can't go to Swiss francs. The dollar yen, pretty stable there, 77, not much either way with what's happening there, very stable currency. Okay, let's look at some of the commodities. Gold, I think, has been very interesting. It's sort of correcting. We did get a low down to 1772. In the bulletin, we mentioned that 1780 was probably it, and quite happy for that to be realised. A little bit below the forecast there, but certainly quite happy with that little low there. Might get some strength coming for gold from here. That's a reasonable pullback. Silver starting to look okay as well, 40.60, so a little bit of a low there in place, so quite happy for that trend to resume. Crude oil, very stable, can't get through that 90 area. Very big resistance there. If it does, there's got to be some news that will force it through that. I actually look at this little trend line here, perhaps we have sort of broken that trend, and I've got a new one. Let's just tweak it a little bit. There we go. So if it takes out below that trend, then down she goes. Momentum indicators don't hold all that good, so probably expect sideways to lower price action there. Copper, same one there, obviously right on this major support. Let's extend that trend line. That's where it is. Break through that, down she goes. But if it holds, then we just trade back into the range. So just be careful on that copper market, but very stable. Okay, just having a look at some of the others. And I guess if we have a quick look at corn, then we'll go into the calendar for the week ahead. Doesn't look too good with corn. Obviously, there's more consolidation expected there. The overall outlook is bullish, but there's no point standing in front of it. Probably expect sideways to lower price action. Same with wheat, 687. On the downside there, probably expect a little bit more consolidation before starting to move higher. Soybeans, as you can see, it's been in that range for such a long time. Failed to break out on the top side, and as a result of that, we've certainly come back within that range. So I just think it's a ranging opportunity there. And you really got to expect a lot of these commodities, they can't move while that dollar continues to be strong. If it weakens, it supports, but at the moment, whilst it's sitting in these ranges, that dollar, you don't expect too much lead either way. Okay, now that's it. Let's have a quick look at the SPY. 41.62. Equity markets there, marking time. Momentum indicators, not too much of a clear signal there, but I think the market, on the back of what's happening in Europe, the support from the central banks might get a little lift in equities. You might see that across the board. I mean, we have seen it before. We get a little bit of a lift. Here's the Dow, and as you can see, sideways price action, but looking for some support. Righty-ho. Okay, well, that's pretty much. Let's now have a look at, let's have a quick look at BHP. Okay, so it's right on its a little bit of correction. Yeah, you can't really say that. I mean, if anything there, looks a little bit of a low in place for an attempt back through 40. Anyway, let's see how that travels. Okay, now looking through the economic calendar, and I guess we haven't got a lot of data out this week, and I expect the market to be relatively stable. I guess the important thing in the States, we've got those housing data and leading indicators. They're probably the tier 1 bits of data there, but as you go through the housing starts on Tuesday in the States. Nothing too much there. Australia, we've got RBA minutes on Tuesday. Wednesday the 21st, Westpac leading index, consumer inflation there in Australia. Bit of data there, not so much. Existing home sales, FOMC rate decision. In the States, we all know that nothing will happen there. So not all that important. Maybe a change in a bit of rhetoric, but that's about it. Coming to Thursday, not too much. Leading indicators and house price index in the States is important. And as we lead into Friday, just a little bit of comment there through some of the governors, but that's pretty much about it. So I guess with the week ahead report, expect much of the same. More confidence we require out of what's happening in Europe in terms of the economic performances, and also in the States as to what's happening there as well. So, but apart from that, probably expect the markets to remain relatively subdued. Maybe a little bit more confidence coming back to the markets, but if anything there, probably a little bit of range strain because we don't get much lead out of the economic indicators. Well, that's it from me. I hope everyone has a great week ahead. Certainly talk to you later. Bye for now.